Good evening and welcome to another edition of Resource PNG. Tonight we feature Oil Search Limited and United Pacific Drilling. First we take a look at this report highlighting Oil Search's growth and development as an exploration company and a partner with the PNG government over the years.
The story of Oil Search Limited and the PNG government as being partners in growth and development goes back many decades. The story dates back to the year 1929 when the company was first incorporated. Since then, the company has diffused its roots in PNG and has been an integral part of the country's development and growth during pre-independence and post-independence years, and undoubtedly will still be in the future. Furthermore, being in PNG for this long, Oil Search Limited is certainly a champion. Having not only survived, or in today's corporate parlance, sustained, but has grown to be the leading oil company in the country. Indeed, Oil Search Limited is a true local. The company has not only provided direct benefits to people whose lives have been affected by their operations, but also embraced the state as a partner in business. Thus, if it's going to be one company that best personifies a true wantok, whose concern is to see PNG develop and grow, among others, that would be Oil Search Limited. The government of PNG has been an investor in Oil Search since its merger with the state-owned company Origin Minerals in 2002, and this has been an important and a long strategic partnership.
The government's equity in Oil Search goes back a long way, including to the time when the government set up an entity called Origin Minerals, and then when that was privatized, it basically was taken over by Oil Search, and the state's equity remained with Oil Search. So when the PNG LNG project was being first presented, there were different ways for the government to take up its entitlement for equity. And of course, the government at the time set up Petromin, and the idea was that Petromin was going to take up equity in any government equity in oil and minerals projects. But then the government also set up a separate entity under IPPC, and there was a bit of, as it were, competition between the two organizations, both under the same government. That was under the Samari government at the time. A bit of competition between Petromin and IPBC as to who would have the equity. And in the end, it was decided by the government of the day that it would be IPBC. So IPBC then, and their Minister for State Enterprises at the time, Arthur Samari, went out and did the negotiations very independently of much of the rest of government, including Treasury. So a lot of the details of the negotiations really were kept fairly discreet. There was some plan to that. At the time they were trying to avoid building up sovereign debt, and so it was argued that if it was handled by IPBC, they could prevent it being sovereign debt when they went out to try and borrow. But in any case, the details really were pretty obscure to the government. It really should have been much more in the public eye and certainly in the government's eye under Treasury at the time.
However, there has been a twist to this partnership and a significant growth in the economy driven by the mining and petroleum sectors, perhaps has a greater say on how the government has made decisions on its investment endeavors. As such, and in anticipation of business opportunities, the then Somali government in 2009 decided to make a trade-off by effectively mortgaging a portion of its shares in Oil Search in order to finance the state's equity in the LNG project. Under this trade-off, the PNG government was able to negotiate a bond with Abu Dhabi's International Petroleum Investment Company, or IPIC, in return for funding which would help finance the government's stake in the LNG project. A 5-year bond was eventually issued by the PNG government to IPIC tied to a share price of 8.55 Australian dollars in Oil Search, with the hope that upon completion of repayment of each loan from IPIC totaling to about 1.6 billion Australian dollars, the government would then retain its shares in Oil Search.
Welcome back. In this segment, we further look at the exchangeable bond between the PNG government and Abu Dhabi's International Petroleum Investment Company, IPIC.
The bond issued by the government of PNG has reached its maturity date in early March 2014. The government, although determined in buying back the shares, was unable to do so. Given the lengthy process of negotiating a deal of such magnitude, and with the fast approaching maturity date, among other reasons, it was then not possible for the buyback. Further complicating the buyback was IPIC's refusal to sell back Oil Search shares, considering the present value of the shares it initially obtained as part of the exchange with the government of PNG.
What happened was, to be able to secure the state's equity in the PNG LNG project, together with the other partners, which were Exxon as the operator and the largest single shareholder, and together with the other shareholders, including Oil Search, the government effectively mortgaged a portion of its shares in Oil Search to IPIC, the Abu Dhabi state-owned development corporation. So they effectively mortgaged it, received the funding from IPIC to be able to buy the stake in PNG LNG, with a condition that the state could basically retain its shares in Oil Search by paying off the debt to IPIC early this year. When the date came along, the state had not paid IPIC, so effectively the government's shares in Oil Search, they still have some other shares in Oil Search, but these shares in Oil Search effectively were transferred to IPIC. And at the last minute, together with the government's financiers, UBS, large bank from Switzerland, was trying to secure finance and then to negotiate with IPIC. But IPIC basically indicated that they wanted to retain those shares. So the government was then in the position, well, that they, 2 weeks ago, or 10 days ago, that it was clear that they weren't going to be able to resecure or retain the shares in Oil Search. So then they started looking at other options.
Oil Search as a company has increased in value over time since the government of PNG decided to effectively mortgage its 15% equity in the company in exchange for funding from IPIC. Even though Oil Search shares has traded high, during which it last traded a staggering 8.57 Australian dollars, Oil Search, as any other petroleum or mineral companies, has experienced highs and lows in its share price. Now that the value of Oil Search has significantly gone up as compared to the period when the mortgage deal was negotiated, means that an attempt to buy back the shares will have to cost the state a higher premium.
Yes, the Oil Search price was much lower when the agreement was negotiated. Oil shares do go up and down, mineral resource shares go up and down, especially when you're a smaller company, because it's very much geared to individual projects, investment confidence, expectations of major development projects. So the Oil Search price had been, at one stage in the past, had been high. It had then fallen back somewhat, and it was much lower at the time when the negotiations, when the arrangement was made with IPIC. So to be able to buy them back effectively from IPIC, the state was going to have to pay a real premium, because the current market price for Oil Search shares is now, as you say, something like 820 Australian dollars.
With the current ongoing debates as to whether the government of PNG then, under Somare, was mindful of further increase in the value of Oil Search, the answer would be yes, it did. And being a shareholder with a bond tag on its shares, the government did anticipate an increase in share price over time. But in contrast, this would eventually pose a problem during the buyback in having to pay a higher premium as a result of the increase in share price. But the trade-off by government was perhaps the only option within its reach if it was to secure equity in the PNG LNG project. The reason for this is to take up equity in a gas project, an investor is required to pay upfront as a precondition of having a stake, whereas in an oil project is variably different, especially in the 1990s when the state decided to have equity in Chevron. There was an opportunity for no upfront payment, but the state was able to pay from subsequent earnings. Despite all the debate surrounding this deal, the good news is, according to Paul Barker, director of the private sector think tank, the Institute of National Affairs, PNG did not dispose all of its shares but held back some.
Well, of course, they hoped that it would increase, because the government's a shareholder in Oil Search. It would like the shares to increase. But obviously, when it came to reacquiring these shares, to effectively reacquire them, they would have had to pay a high premium. They still have other shares in Oil Search, and the government's gained from the appreciation of the value of those shares. As I say, it's rather a case of robbing Peter to pay Paul, because the government effectively forfeited its Oil Search shares to buy into LNG, whereas, of course, by retaining the shares in Oil Search, it already had a stake in PNG LNG. So yes, you were paying full price on one, or the commencement price for entering the LNG operation at the start. When you've had different projects like the Chevron-led oil project, the government was able to take a stake without paying upfront, and it was able to pay from subsequent earnings. But that opportunity doesn't really seem to exist when it comes to gas projects. Gas projects, you really have to buy in if you're going to take up equity, whereas in oil there did seem to be a variation, at least in the 1990s when the government took up its share in the Kutubu oils.
You're with Resource PNG. We continue our report on Oil Search.
With the loan obtained from IPIC, PNG is now an active participant in the LNG project. Furthermore, with the IPIC deal, PNG was also able to avoid raising its national debt level. But the question is, weren't there any other available options or better deals that the Somare government could have explored? According to Paul Barker, there were options available. But considering such a massive project like LNG, it was rather complex, especially when taking the cost into consideration. However, with all these difficulties, the state was able to string together a group of potential financiers and eventually managed to secure the funds. Furthermore, with a deal of such magnitude, has now leveraged the state in securing any future deals, as the state has earned that credibility through its deal with IPIC. And despite the shortcomings surrounding the deal, this could be something to learn from for any potential future deal arrangements.
It's quite likely that a better deal could have been worked out. It was not an easy situation because PNG was, one was talking about a very major project that was at the time envisaged to be costing $15 billion US. Subsequently, the cost has increased further, of course, sort of over 19 billion to develop it. So to go to the market is a big challenge, even if you've got a large multinational corporation like Exxon as the leader. To go to the market is a real challenge, especially for a small country like Papua New Guinea. So it was always going to be a challenging situation. It was not going to be easy to secure finance. As it was, it worked out. The project managed to string together a whole series of major financiers, participants, and it secured the funds. But that hopefully would make it easier in future. We've established a credibility, and with Exxon seemingly delivering the construction phase on time and about to launch into the production phase, perhaps even slightly ahead of forecast, that will give a pretty positive signal to the financial market. So it was always going to be a challenge. We probably, if we'd had more professional input in the arrangement, would have been able to get a better deal. As I say, there's a lot to be said for an element of transparency. Companies negotiating these things like to work a little bit discreetly, so there's commercial confidentiality, so that poses a bit of a problem. But seeing as it's state money and state equity that we're talking about, the state does have an obligation to be transparent. And now we're just joining up with the EITI, the Extractive Industry Transparency Initiative, as a means to make sure that proceeds from LNG and any other resource projects are transparently received and known by both parties. But at the time, yes, certainly it was a challenging negotiation. We probably could have done better. And it certainly should have been undertaken in a manner that the government and the public were more aware of. But unfortunately, that's history now.
Recently, the state, through the O'Neill Dion government, although surrounded by colossal controversies and in a mad rush not to miss out in the lucrative venture with oil search, has successfully negotiated a deal with UBS, an international financier, to fund the state's stake in the new partnership deal. Under this arrangement, the government will subscribe for 149.39 million shares in Oil Search Limited at 8.20 Australian dollars, equivalent to 17 kina per share. This means that the PNG government will now somewhat at a cheaper price resecure shares in Oil Search than if it was to buy back the shares from IPIC at the price per share of 8.55 Australian dollars. The state's ambitious move to maintain its long-standing partnership with Oil Search in development and growth is seemingly a strategic move to benefit from the expansion of the company. And talking expansion, Oil Search has recently moved to acquire close to 23% gross interest in PRL 15, containing the Elk Antelope gas discoveries through the acquisition of PAC LNG group of companies for $900 million. In addition, Oil Search's partnership with Total, the French leading oil company, is also a story of its own. Indeed, Oil Search, being part of PNG for decades, is seen to be at the edge, whereby it is already attracting partners who want to use its local knowledge. And its setup is also a firm launching pad for companies like Total, who wants to do business in PNG.
It seems that Oil Search has made available shares to the government at a price which would be somewhat cheaper than the government was going to have to buy their shares back from IPIC. So there's an advantage to the government there, and there's an advantage to Oil Search in terms of having been able to buy out this PAC LNG, which was a shareholder in the LNG development project, together with Interoil, and now you have Total coming in, big multinational, French-based multinational oil company coming in as the prospective developer of the Elk Antelope fields and potentially some other fields in that Gulf province area. So yes, it may be a way that enables the government to take up equity in that project and have a significant stake in that project more readily, but also to give Oil Search some extra leverage, because that portion of the shares, the buyout of PAC LNG, had been expected to go to Total's partner Interoil. Instead, it's gone to Oil Search with a preemptive right if the lead player now were to step back, to sell, reduce its shares, etc., that Oil Search now has the first right on those shares ahead of other potential shareholders. So it does give some leverage to Oil Search, and of course that gives leverage to Oil Search to influence the nature of the subsequent development. Now, at this stage, we just see it that Total is fully committed to this project. Oil Search is also an Oil Search, and that should be a genuine net benefit to that, because it gives Total a lot more access to the considerable experience that Oil Search, Total the access to the considerable experience that Oil Search has in PNG. It's an exploration company going back to about 1929, and a development company or a partner since 1992. And it's been, of course, the operator of the oil fields in Kutubu ever since Chevron withdrew. So there's a lot of experience that Total could benefit from having Oil Search in there. Oil Search had been expected to go in, but not in such a key position. Now there are questions about whether Oil Search would want to apply extra leverage, like encouraging Total and partners to utilize the existing facilities rather than establishing new facilities in Gulf Province. And there are pros and cons to PNG from that.
Thanks for staying with us. In this last segment of our report on Oil Search, we see what is important for government consideration in light of partnerships.
Now that the PNG government and Oil Search has again re-established partnership, what is important for government is to consider the following advice from Mr. Paul Barker, Director of the Institute of National Affairs.
Again, just going back to the next phase of the Interoil, or what was the Interoil project, now the Gulf project. Of course, there are different pressures that are there. Gulf provincial government and some of the community in Gulf would like to see a standalone processing facility. Now that has some advantages because during the construction phase there's considerable employment generated, but that's a very brief period of benefit. We know that when the PNG LNG project came along, there's great expectations of the benefits occurring when production commences. But in fact, for much of PNG's community, the major benefit is during the construction phase itself rather than when the income flow occurs. When the income flow occurs, in due course, there will be revenue to the state as both a shareholder, but obviously also from tax from the project. But during the construction phase, it went up to about 8,500 Papua New Guineans being employed. In total, there was something like 21,500 staff, and most of them were from overseas. Now, hopefully, in the next phase of construction for a new project, there would be an opportunity to re-employ many of the Papua New Guineans, maybe some of the overseas people as well, but there are going to be many more Papua New Guineans hopefully trained during this phase. So clearly there would need to be construction whatever happened. There would have to be upstream construction, pipeline construction, and then the question would be whether they just negotiate with the existing project in which the state is already, of course, a shareholder, and had access to the existing facility, maybe with some upgrade, but certainly utilizing the existing facility. That would reduce the capital costs of the Elk Antelope field, and that obviously has an advantage to the investor. It has some advantages to the country in terms of there would be earlier returns, and to the country in terms of both dividends and taxation, but clearly the country would lose out on some of the construction benefits and the employment associated. But it's certainly a strong lesson for PNG when it comes to negotiating any of these large projects is don't just try to go it alone and discreetly. Yes, there may be individual politicians who like the idea of going behind closed doors and negotiating projects, but we've seen problems with a number of different projects. We've clearly seen that there could have been perhaps greater benefits to PNG from the PNG LNG project if the negotiations had gained extra advice and had been a bit more transparent. Also with the Ramu Nickel project, mining project, again it was very much some politicians talking to a state-owned corporation overseas and giving them some information which in some cases wasn't the sound information. We understand, for example, that they were told that to employ Papua New Guineans it would be $2.29 an hour minimum wage, but clearly in the mining sector you can't, Papua New Guineans are not going to be very interested in working on minimum wage, especially if they're going to be in more technical positions. So a lot more we should have learned this lesson from the Bougainville situation. From Bougainville, we realized it's important that all the negotiations are pretty open and upfront with the landowners, but the negotiations also between companies need to be as open as possible, accepting that some things are going to end up still being discreet on confidentiality grounds with companies. But wherever the state is involved, because they're dealing with public funds, they have really little right to be too confidential. And of course this EITI exercise is all about saying that the benefit flow, including taxation aspects to do with the extractive industries, will be public knowledge, and they won't all be hidden behind closed doors. So the state has that obligation. Ministers have to know that. We know that sometimes ministers go overseas. Sometimes ministers even go overseas and start talking about things which are not in their portfolio, talk to companies overseas, but And they may think that this is all behind closed doors, but in fact those companies talk to other companies, and the message does come back in the end to PNG. So it's better to be transparent from day one rather than trying to negotiate behind the door deals.
Paul Bacchus advises that the state has to be transparent in its deals to avoid public speculations of deals not in the best interest of PNG. Furthermore, now that we have the Extractive Industry Transparency International, or EITI, on our source, it is now incumbent on our leaders and their so-called negotiators to assent to transparency principles to ensure that they are visible to the public eye, who will obviously bemoan any deals that are discreetly done. Conversely, with all the current public debates on the PNG government and IPIC deal, it is also important to note that the government has not missed out. In fact, the government has now been able to negotiate a better deal with Oil Search. Furthermore, the bond that the government issued has enabled the state to have a stake in the LNG project. And in terms of Oil Search and the government of PNG's partnership, there seems to be new windows of opportunity for the government to further benefit given the expansion of Oil Search. Perhaps with all these positive outlooks that the new partnership will bring for Oil Search and the government of PNG, what's promising is many more years of growth and development for PNG facilitated by this new partnership.
Back to the show. In this interview, we speak to the United Pacific Drilling General Manager, Bill Hughes. We find out about the company's operations and projects in PNG, its human resource capacity, and a lot more.
I have with me Bill Hughes, the General Manager of United Pacific Drilling. Bill, thank you for spending some time with us today.
Thanks, Anya.
Bill, tell us a bit about what United Pacific Drilling's been doing here in PNG.
United Pacific Drilling was established here some 44 years ago by an American company back then, and we've been involved in mostly grassroots exploration over that time, and particularly in projects such as Oktedi, Porgera, Wafi. Some of those projects are still in development now, but I can remember when Oktedi was still a mountain, Star Mountain was still there. And I can remember when we were at Porgera, our camp was right at the top of Wari, and probably now that site is about 1 kilometre in the air. So we've been involved right from day one in a lot of the major projects throughout Papua New Guinea, doing mainly exploration work, and using equipment that was suitable for flying in very remote locations. Of course, Oktedi, those places, from utilising helicopters. So that's mainly what we've been involved in, and even to this day still doing grassroots exploration work. Also drilling in mines and development of mines over that year. Spent a lot of time at Oktedi, Porgera, Misima, some time at Lihir, Hidden Valley, which is now developed into a mine as well. So it's mainly been along that exploration phase of mining in Papua New Guinea.
So, Bill, 44 years, that's really vast experience, isn't it, really, in terms of PNG history and definitely mining history?
It most certainly is, and over that time we've provided a lot of training for Papua New Guineans. And as you can imagine, that sort of amount of training has developed some good Papua New Guinean tradespeople, drillers and crews that we still have with our company today. In fact, some of those fathers now have their sons working in the company as well, learning their trade as well. Yeah.
So draw a comparison between those early exploration years and today, and what the extractive industries are doing today.
Certainly the expectations have changed considerably from the early days, particularly from the community and the landowners. And there's certainly much more involvement by Papua New Guineans. It's no longer an expat's job anymore. Certainly Papua New Guineans have the ability to do the work, such as the professions, you know, the geology, engineering, management, the tradespeople. So whereas before in the early days we never had access to that, whereas now there's a lot more involvement with Papua New Guineans.
And in your opinion, is that a good thing?
Absolutely. And in fact our business was very proud in the fact we had apprenticeship training programs for many years and still do, because we feel that that's in our best interest to train the local people to do what we need to do, and it's been very good for us and for the Papua New Guineans too.
So you've mentioned human resource capacity, a little bit about landowners' expectations. What about the industry itself?
The industry itself has obviously come under a lot more scrutiny and pressure, particularly with environment, safety, and they realise that world's best practice now has to be the norm for operating in Papua New Guinea. So that has created change for the better. Government policy has changed a lot over the years in different forms, and some for the good, some not so good. But I think that overall Papua New Guinea has developed into a first-class mining resource country, and that's been over, I guess, the time that it's been developing in this country.
You mentioned that was actually going to be the next question, was regarding or was going to be around government policy. How do you think there's been improvements, and from whose perspective? From the landowners, from the drillers themselves, from the investors' perspective?
There has been over the years some very good legislation introduced to encourage investment and to help those investors feel comfortable with the managing those risks, and to have some sort of comfort that they're going to be, they can have some sort of longevity out of their project with not being burdened down by changes of policies after they've already started their projects. So you might argue against tax holidays, but it also introduces a incentive for investment to actually to start. Those sort of things make a difference. There are some negative things like increasing mining royalties may be a disincentive, but in the long term I think tax credit schemes have been helpful. I think developers are keen to be involved in that sort of thing. It does provide development and infrastructure improvements for communities, and I guess that helps the government to make sure those services are reaching the grassroots people as well. So those sort of policies can have a good impact on our industry.
You're watching Resource PNG. We continue our interview with United Pacific Drilling.
Now, when most people hear the word drilling, they think of terrain, huge challenges, resources. Was that the case in the early days, and is it still the case?
The drilling itself is not that difficult. It is, well, Papua New Guinea is a young geology, and it can provide some sort of challenges for us, but I think the most difficult part is getting to the place, the access, and working in these very remote locations, mostly on the side of very steep mountains or very remote islands. So that's probably more of the challenge, and to be able to maintain good progress in your operations with that remoteness. So.
Now, with the recent downturn with global commodities, how can the government best support this industry?
I'm not too sure. I mean, it's a very cyclical business that we're in. We will always see these downturns. It's influences from not just locally but around the world, as you say, financial difficulties, prices of commodities will affect that. So the local influences will come from government policy. As you say, we need government to think more in terms of encouraging investment and certainly protecting the investment that they have, so that it sends a good message to any further possible investors to spend their money in country.
Do you think, as you say, there is a cycle, there are lean times, there are better times. Is there anything real that can be done to create a buffer?
I'm not too sure. As I said, I've been here 30 years myself, and I've seen the downturns come and go, and the up cycles as well. I think you need to understand that as a business to manage that. There's not a lot we can do apart from maybe work in other areas of our business. It's not just exploration, but we can do water well drilling, we can do construction work with drill and blast, we can sort of venture out of just totally exploration type work.
So maybe diversification?
Yes, basically, yes. Yes.
Now, Bill, you were involved at the ground up with Octedi Mine, rather large issue at the moment, but we'd like to hear just, you know, what your historical perspective on that, perhaps not historical, but certainly a commentary about the changes it's going through currently and where it's come from.
Okay, well, it's not just Octedi, but it's every project in this country. But obviously we all know what's happened at Octedi, and that obviously will not be reversed, but it certainly is a lesson that everybody has to understand and make sure that doesn't happen again. It certainly, there wasn't the interest or the pursuit for the environment that we see today from groups not just within Papua New Guinea but from outside influences as well, to make sure that these environmental impacts don't get out of hand. What we need to see is certainly a compliance to world's best practice, and I can assure that every miner that now understands that's his aim, to make sure the environment is protected, because the local people rely on that environment. It's not just tourists, it's people that rely on the life resources that are in that environment. The things like Nautilus that are in the news right now, and the pressure that's come to bear on these companies, it means that there's a higher level of compliance, which is a good thing. And hopefully at the end of the day we can strike a balance between the investment and the environment, so that we have a win-win for all parties involved, the community, the government, the investor. So I think scrutiny and pressure will always ensure that the environment will be considered at all times.
Thank you so much for your time, Bill.
Sure, thank you.
Bill Hughes, General Manager of United Pacific Drilling.
That ends Resource PNG. If you have any comments or queries, do email us on this address, resourcepng@mtv.com.pg, or to find out more, check MTV online, that's www.mtv.com.pg, and go to our Resource PNG page, or you can check our page on Facebook. Until the same time next week, bye for now.